Okay, so welcome back. This is our lecture 2 of basic concepts, and this is for CMA Intermediate December 2022 attempt. Okay, assessment year is 2022-23, and Finance Act applicable is what? Finance Act 2021. Okay, 2021. So I'm taking you now where we left last time. Okay, so this is where we have to start from. Exceptions to the general rule that income of previous year is taxed in the assessment year. Okay. So what is our current previous year? Current PY or previous year is 2021-22. Okay. So income of this current previous year will be taxed in the assessment year, our current assessment year. This will be what? 2022-23. Right? For individuals, okay, we know that the due date of filing return of income is July 31st. So many of you are working, you would all be knowing that. Okay. So, right. So this is our current previous year. So this is what happens that your whatever income you have earned between April 2021 and March 2022. Okay. Between this period, whatever income you have earned, okay, it will be taxed in your assessment here. Okay, that is this year. There it will be taxed. But there are some exceptions where you have to tax the income in the previous year itself. Okay, there are some exceptions where you have to tax it in the previous year itself. यहाँ हमने क्या देखा नॉर्मली क्या होता है आपका करंट प्रीवियस ईयर है 2021-22 तो सारा जो आप इनकम इस प्रीवियस ईयर में अर्न करते हो वो AY में टैक्स होता है. This is the normal thing. Okay, but there are some exceptions where they have to tax the income in previous year itself. Okay, they won't wait for the current assessment year. Why? Because of some reasons. You will understand when you see the cases, immediately you will understand why they are being taxed in the previous year itself. Okay, so let's see those exceptions. So here income will be taxed in the previous year itself. Okay, so first one is income of non-resident SSC from shipping business. Non-resident who is doing shipping business. See, now in shipping business, what happens? A ship comes to our port. This is non-resident means it's a foreign ship basically. Okay, it will come to your port now. If it comes now and it goes out of your port, it might not return for 4 years. Okay, so which is why when it comes now itself you tax because you do not know when it will come back again. Okay, so that's why it is taxed in the previous year itself. So one is shipping business of non-residents, and how it is taxed is 75% of their gross receipts, okay, is deemed to be their income. 7.5, not 75%, sorry, 7.5% of gross receipts. Okay, because you will not have now, they have just come, they are still doing their business. They have come into one trip in India. So their PNL and all will not be ready. You will not get ready-made profit and also you have to, you assume that their income is 75% of gross receipts. Okay. You won't be asked any problem and all from this. You only have to know this much. That's right. ठीक है तो बस इतना ही है इसमें कि shipping business of non-resident SSC. This is the first exception. What next? Income of a person leaving India either permanently or for a long period. Now here itself, but easily you would have understood why we take this as an exception because he's leaving India. So in next year when you want to tax it, you might not be able to catch hold of it. अगले साल आप इसको टैक्स करना चाहते हो तो आप इसको पकड़ नहीं पाओगे. Okay, so income of person who is leaving India permanently or for a long period, income is taxed in the previous year itself. Okay. Now next is income of bodies formed for a short duration. There are many bodies which are formed for short duration. Their duration itself for 2 months, 3 months, and when they are formed, you will have people from different states. Say the president of that body, will be from Assam. Okay, and say secretary say is from Delhi, right? So there'll be different people from different areas. Okay, right? So now the problem is that if now this is formed for short duration, 2-3 months the work has been done, and now it is dissolved. Okay, in 2-3 months it is dissolved. Now, if in the assessment you want to tax it, you are going to the secretary. Okay, please give me tax. He says, no, I don't have any accounts. Go to the president. President is in Assam somewhere. So he may say, no, I am not maintaining. Actually, it's some other person. Okay, all these things can happen, and you've got people from all around India. So it becomes tough to collect tax. So income of bodies formed for short duration is taxed in the previous year itself. Okay. Next is person likely to transfer property to avoid tax. Now this one is your department acts on a tip off. Tip off means what? You have got to know that okay, this person is going to do this thing to avoid tax. So he has some properties. He is going to transfer this and all. Okay, because he has received a legal opinion that if he does this, then he will not have to pay tax, whatever it is. Like if the income tax authorities, they get a tip off, then they will go ahead with the fourth point. ठीक है, इनकम टैक्स डिपार्टमेंट जो अथॉरिटी है, उनको अगर ये खबर लगी नहीं ये पर्सन जो है ऐसा कुछ करने वाला है जिससे टैक्स बचाने के लिए अपना प्रॉपर्टी दूसरे के नाम पे करने वाला है, so then they will immediately spring to action and they have the power to collect tax in the previous year itself. Next is discontinued business. Now, discontinued business is the last exception. Here, it's little different from the other four. Reason being, here your income tax authority, that is your assessing officer, okay, your assessing officer has discretionary power. That is, he has the power, either he may assess it in the previous year or he'll wait till the assessment year. He can take the call. So what happens is, ठीक है, समझ में आया नहीं? Discontinued business में assessing officer के पास power होता है, या तो वो same previous year में कर दे या वो assessment year में करे. So when he takes this decision, basically, is that your there are many people who have got several businesses, correct? So even if one business is discontinued, they are still accessible for other business. They are still very much in India. So there is no need for this urgency to tax them in the previous year itself. Okay, because their other businesses are still continuing in India. It's just one loss-making business that they have discontinued. So in this case, you can wait till the assessment year. But if the person had only one business and you might not be able to track him, then he'll go ahead and assess it in the previous year itself. So understood, this is the exceptions. Okay, this is an important question, very easy. Okay, it's okay if you don't remember the sections here. ठीक है, sections याद नहीं भी रखेंगे तो चलता है, कोई प्रॉब्लम नहीं है यहाँ पे. ठीक है, कि आपको sections मालूम होना चाहिए करके, ऐसा कुछ नहीं है. Okay, so even if you don't remember the sections, it is fine, and you don't have to learn these sentences as it is. ठीक है, just remember the main points here. What is this about? That is sufficient. Okay, but this exceptions is an important thing. Okay, right. So next, so we'll go ahead and we'll talk about what is SSC. Okay, so we'll talk about SSC. So SSC means, okay, a person by whom tax or any sum of money is payable. So if under the Income Tax Act, you have to pay any tax, you are liable to pay any tax. Okay, you're liable to pay any tax or any other sum of money, that can be any interest, penalty, anything. If you have to pay, you're liable to pay under the act, okay, then you will become an SSC. This is the first point. Okay, here it's not essential that department has taken any proceedings. That is, proceedings means you have got any notice or not from the department, that is immaterial. Okay, so if you have to pay any money to the department, then you become an SSC, first point, straight up. Okay, now second point here is whether in year, okay, whether it has been taken or not. Okay, that is the first point. Now, second point B says, okay, it is the reverse of point A. Point B is what? Reverse of point A. Here they said whether proceeding is taken or not, and a proceeding is immaterial. Here they are saying that he is not liable to pay any tax, anything, but still a proceeding has been taken. He has got a notice. Okay. He has no tax to pay, interest or penalty, nothing is there. But he has got a notice, then he becomes an assessee. So these 2 points are alternates of each other. One, if tax or any money is payable, then he is assessee, whether or not proceedings are taken. Second, if he doesn't have to pay any tax, interest, penalty, but proceedings are taken, then again assessee. Okay. Both cases assessee. You can write in one sentence in your own words. Okay. In taxation, always try to write it in your own words. It's so vast that you will not be able to learn. Okay. Right. So now next is, so these first 2 are the most important things of SSC. So anything should be payable or you should have got any notice. Okay. So these 2 are SSCs as the main point. In other, there will be two or three more points, but these are like not that important. Person who is accessible for income of another person. Okay. For example, you have got a minor child. Okay. For the income of the minor child, you are accessible. So then even if you yourself are not an SSC, you will become an SSC. Okay. Right. Then deemed SSC. So there are some deeming provisions. As and how we go ahead with various chapters, we will learn several deeming provisions. So deeming means when the act is saying that you are not an SSC, but we are considering you as an SSC. That's called deeming provisions. हिंदी में बोलेंगे मान लिया गया. अगर डिपार्टमेंट ने आपको मान लिया कि आप एसएससी है, okay, that will, then you will be an SSC. So in other definitions, we'll have some definitions now, and there will have a point where if CBDT says that you are, if CBDT says that you are a company, then you are a company. Okay, things like that you will get. So these are deeming provisions. It means that even if you are not a company, but CBDT is saying that you are a company, then you will be a company. They are called as deeming provisions. Okay. हिंदी में बोलेंगे मान लिया गया. Okay. ऐसा as per income tax rules वो SSC नहीं है, लेकिन डिपार्टमेंट ने मान लिया. Okay. So this is, third is deemed SSC. In short, you can call it as what? Call him as deemed SSC. Okay. Then last one is SSC in default. Okay. So wherever there has been any default from your end, you become an SSC in default. Okay. So there is one provision called TDS where tax has to be deducted at source. Okay. But if you were liable to deduct tax and you did not deduct tax, then you become a defaulter. So if you become a defaulter, you become an SSC in default. Okay. So actually point E, if you see, it doesn't have its direct relevance. This SSC in default, you can just correlate it with this one, any proceedings. So if he's an SSC in default, then some proceedings will be taken, correct? So then he'll more or less become an SSC under point B as well. Okay. So these are the 5 conditions which make you an SSC under Income Tax Act. Okay. Any questions so far? Okay. All good. So next is now financial year. So financial year is defined by the General Clauses Act 1897. It's a period of 12 months basically. Okay. A financial year is, it starts from 1st of April, ends on 31st March of next year. Okay. This you all know already. So there's nothing much to talk about it. One thing is just helpful, that remember that it is defined in the General Clauses Act. So you can get an objective question saying that, because you are studying Income Tax Act, right? So you will feel that it comes under Income Tax Act. So you will have options in Income Tax Act, General Clauses Act. So actually this is defined by the General Clauses Act. Okay, right? So this is your financial year. Okay. So next is previous year for a new business or new source of income. Okay. So if your business say is starting midway in the previous year, so your business is starting from 10th December 2021. So then your previous year will be what? It will start on 10th December, ending on 31st March 2022. Okay. So previous year will always start from the period you have come into existence. Okay. So if you have come into existence midway during the previous year, your previous year will start from 10th December. But assessment year is always 12 months. Okay. Why it is 12 months? Because in assessment year, the income tax department will collect taxes in assessment year. Correct. Now, this one SSC might have been incorporated from 10 December. But what about the others? There would be many other SSCs, right? Who are there from 1st of April. So assessment year always has to be 12 months. Okay. And there are different months when tax is collected from different SSCs. Okay. Okay. तो यहाँ ये समझ में आया, ये इंपॉर्टेंट पॉइंट ये है यहाँ कि अगर आपका बिजनेस स्टार्ट हो रहा है 10th दिसंबर से, ओके, सो इनकॉर्पोरेट हो रहा है आपका 10th दिसंबर 2021 से, तो आपका प्रीवियस ईयर ये रहेगा, विल स्टार्ट फ्रॉम 10 दिसंबर एंड ऑन 31st मार्च 2022. ठीक है, ये सब there are some small definitions, some of which you would already be knowing. ठीक है, now person. ठीक है, now we are talking about what is a person. So here you can say it starts with person includes. Okay, that means it is what? It is an inclusive definition. Okay, person includes, one is an individual. Okay, then second one is HUF. So individual is any of, so we'll be talking about each one of these. Okay, so at this stage I'll just show you all of this. Okay, and because we're going to discuss each one of this. Okay, individual, HUF, company, firm. Firm includes LLP or limited liability partnership. Okay, so and then you have AOP, BOI, associations, association of persons, body of individuals, local authority, and AJP, artificial juridical person. So this one last is the residuary head. So which is whatever is not there in any of these, it comes under the last one. So because, okay, so anything which is not there, okay, if you are not a person under any of these, okay, then you will come under section 7, the point number 7 automatically. Okay, so that's why here there was no need actually to put an inclusive definition, because you have a residual category in that. Chalo, okay, so one by one we will do all this, so which is why at this stage I haven't explained it. Okay, right, and then this is some additional point. One is your union government cannot be taxed. Okay, now taxation, how it is done, how taxation is done is you will have a topmost authority. Okay, so and there will be many people under it, under the topmost authority. Now topmost authority will collect taxes from all of them. Okay, will collect taxes from all people, everyone, and it will be used now for their own benefit, for the benefit of the SSCs. Okay, so it will collect all money, and whatever money is collected, say let us say it has collected all money and this much it has collected here. Okay, so this money, what it will use it for? It will use it for these people only, their benefit, giving benefits to all these people. Understood? So which is why, so what is it doing? It is just collecting money and giving benefits. So basically any taxation system is run by a topmost authority, which is why that topmost authority is not taxed. Okay, because it is administering your cash. Okay, okay, so in taxation, that's why any topmost authority is not taxed. This is the common principle of taxation. Union government cannot be taxed. Okay, and there is one more peculiarity, that AOP, BOI, Association of Persons, Body of Individuals, Local Authority, and Artificial Juridical Person. Okay, they will be an SSC whether they are deriving income or not. whether deriving income or not, they would still be an assessee. Okay, this is just a general point. Okay, doesn't have too much implication on us. Okay, so now we can start with each of these persons, understanding what is an individual HUF. Okay, so that's what we'll do now. So first thing is individual. Now, individual always will be a natural person. It should be a human being, any kind of human being, minor, unsound mind. That is immaterial. That is kind of disease of a person, correct? Or the age of a person. So individual means any natural person. Okay. So that is the definition of individual. So if he is a living person, he will not fall under any of the other categories. He will become an individual. He will be taxed as an individual. DTs are AJP, artificial juridical person, okay, or artificial judicial person. Okay, so DTs are what? We have got things like Guru Granth Sahib, not Guru Granth Sahib, you've got some dargahs and all, where funds are collected in the name of dargahs, or in the south also you have got many such places. Tirupati Trust you have got. Okay, so money is collected in the name of God here. Okay, and you also temporarily also you do it in the name of Ganesh and all that. Okay, so these are called as DTs. Okay, wherever you have a god, okay, or a revered figure on the name of which you are collecting money for a temple or masjid. Okay, it is called as DT. ओके दैट्स द मीनिंग ऑफ डीटी. ठीक है, डीटी मतलब शॉर्ट में हम जो भगवान बोलते हैं ना, भगवान के नाम से जो भी आप कलेक्ट करते हो तो भगवान को डीटी बोलते हैं. ओके, दैट्स कॉल्ड एज डीटी. अच्छा, नाउ ट्रस्ट और डिस्क्रिशनरी ट्रस्ट इज एन एजेपी. ठीक है, ट्रस्ट यानी हमको मालूम है ट्रस्ट में क्या होता है कि ठीक है, यू हैव एन ऑथर ऑफ द ट्रस्ट. ठीक है, यू गॉट एन ऑथर ऑफ द ट्रस्ट. सो ये जो है ऑथर will appoint some trustees. Okay, the author is going to appoint some trustees. Okay, this is the author. He'll appoint some trustees. He'll give them some property or money to manage. Okay, say he gives them 5 lakhs rupees. Okay, to manage. Okay, and this will be done for the benefit of another person called beneficiary. Okay, so this 5 lakhs rupees these people will manage, and as per the rules of the trust they will give benefit to this person. This is called a trust. ठीक है, ये ऐसा trust काम करता है. It's you would have seen in movies and all where the heroine or hero whatever, they are say 12-13 years old, so their uncles, they become trustees of parents funds. Okay, and it is said that when this child becomes 18 years of age, whole money should go to this child. Till that time it will be managed by the uncle, right? Something like that we have seen. So that is called a trust. ठीक है, इसमें एक और word we have seen, discretionary trust. Okay, discretionary trust is also trust. Okay, there is nothing much different. Only thing is that it will have some power to decide. Okay, so many times the author, say the author, I'm just giving you a rough example. So author gives the money to his brother and sister. Okay, that is the uncle of the beneficiary. Okay, he's giving it to brother, and he's telling them, if you feel that my son is leading a good life, only then you give this money to him, otherwise don't give. So now this person has the right to decide this, correct? So it becomes a discretionary trust. Best example is Nobel Peace Prize, Nobel Medicines Prize, all those prize you get, right? So that is a lump sum money which is given by Alfred Nobel. Okay, Alfred Nobel, he has given a lump sum prize, and interest of that is given as these awards. But the jury has the power to decide who will get it. Okay, so wherever your trust has the power to decide, it is called as a discretionary trust. Okay. Okay. So that is trust. These are some small points about individuals. Okay, basically natural person. Now next we are going into HUF. It consists of people who are descended from a common ancestors. This is like a family business. Okay, includes their wives and unmarried daughters. So it is basically like that. HUF will be like this. If you have an HUF, say one husband and wife, they have started an HUF here. Okay, and so they have, let us say, two children, one boy. Okay, they have two children, a boy and a girl. Okay, now girl till the time she's unmarried, she'll be part of HUF. After marriage, will not be part. Boy, let me show boy in some other color. Okay, if the boy is married, then boy's wife will also become member of HUF. Now his two children here, one boy and say let's say one girl. Okay, now these two will become member. Okay, now girls' children will not become members of this HUF. Okay, so this is how it will go on. Then again, when this girl is married off, this girl is married off, then she'll move out of the HUF. So this is how an HUF is constituted of. It's a Hindu family business, basically. The persons lineally descended from a common ancestor, includes wife and unmarried daughters. Okay, right? And so HUF covers undivided families to which Hindu law applies. Okay, and here one more thing is Jain and Sikh families. Okay, see, Jain and Sikh, they are not Hindus as such. Okay, so but for income tax purpose, Hindu law applies to them. Okay, so even for Jain and Sikh families, the HUF concept applies because Hindu law applies to them. Okay, for taxation purpose. Remember, okay. So Jain religion is different as such, and Hindu religion is different. Okay. No, Kanagraj, married girl is not covered in HUF. Okay, so if she gets married, then she will join the HUF of her husband. Similarly, here, son's spouse will be included in the current HUF. Okay. Then, and there's one additional thing is, once you have been assessed as an HUF, you will continue to be assessed as an HUF. Okay, till the partition. Okay, you don't have to, every year you don't have to prove that you are an HUF. Once an HUF, it will go on as an HUF. Okay, till partition. This is about Hindu undivided family. Okay, so next is the most important category, which is company. Right, so what does it mean? One, an Indian company. Okay, so we will see what an Indian company is. Then second one is a foreign company. First one is an Indian company. B says a foreign company. Okay, and this one here, last one, you can say any institution, association, or body, that is any, you can say any entity, okay, which was accessible as a company for assessment year on or before April 1, 1970. So why this point is there in definition of company is any institution, association, or body which was assessed as a company for assessment year on or before April 1, 1970. So what happened is, before assessment year starting on April 1, 1970, okay, the definitions of all these persons were little different. Certain things which we are now seeing as a company that used to come under HUF then not HUF, sorry, used to come under AOP, Association of Persons. So tax structure was not very well structured. So a committee was formed and it structured all this, okay, in line with whatever is existing internationally based on that and based on India's requirement also. Everything was structured. So after it was structured, after that structuring, from April 1, 1970, we had some new definitions. Okay. So that's why it is saying that if it was an association before, okay, so if it is an association now, you're calling it as an association, but before this change it was called as a company, then it will be a company for income tax purpose. ठीक है, ये पॉइंट मैं फिर से बता रहा हूं आपको हिंदी में. तो पहला और दूसरा तो सीधा इंडियन कंपनी है. ठीक है, सो हम बात करेंगे इंडियन कंपनी का. बेसिकली इट्स कंपनीज रजिस्टर्ड अंडर योर कंपनीज एक्ट, और जो भी वट एवर आर स्टैट्यूटरी कंपनीज, ऑल दैट कम अंडर इंडियन कंपनीज. सो इसके बारे में विल टॉक सेपरेटली. ठीक है, सो देन सेकंड इज अ फॉरेन कंपनी. ठीक है, दैट आल्सो वी विल सी. एंड थर्ड में इट इज सेइंग इट इज यूजिंग अ डेट. तो आपको ये डेट याद रखने की जरूरत है क्या? डू यू रिक्वायर टू रिमेंबर दिस डेट? नो. ओके, सो यू कैन जस्ट यूज द वर्ड formerly called as company, an association which was formerly a company. That much you can say is sufficient. Don't need to remember or memorize this date. So third वाले में क्या था कि as I said, इस डेट के पहले, before this date, थोड़े डेफिनेशंस अलग अलग थे पहले. ठीक है, फिर कमिटी बनाई गई और उसको स्ट्रक्चर किया गया. तो ये बोल रहे हैं कि अगर पहले, इस डेट के पहले वो कंपनी था, और अभी अगर एसोसिएशन ऑफ पर्संस बन गया है, इन पहले कंपनी था ना, सो इट विल बी असेस्ड एज अ कंपनी. दैट्स व्हाट इज बीइंग सेड. क्लियर? ठीक है, so these are your definitions. And there's then one more thing. Then this is institution, association, or body. Okay, whether incorporated or not. Okay, so any institution which is declared by CBDT to be a company. So this is one of that deeming provisions which I was talking about earlier. Okay, if CBDT is calling it as a company, okay, then any association, body, anything, any entity, that will be taxed as a company if CBDT is declaring it as a company. So this one is just your deeming provision. Okay, so CBDT, Central Board of Direct Taxes, has power to assess anyone as a company if it feels that its structure is like a company. Okay, okay, so these are all your, this is all comes under a definition of company, right? The company is done. Now here I'll just tell you that Indian company and foreign company. Okay, so here if you see this figure, okay, if you see this figure, so here your first thing is, this whole thing is company. What I have underlined here, what I have basically highlighted in green, whole thing is company. Okay, now what is Indian company, what is foreign company, that we have to see. So this is a foreign company. So basically incorporated in foreign country is foreign company. Okay, now this part is said to be domestic company. So we will see the explanation down. This part is said to be what? Domestic company. So in domestic company, what comes is Indian company, which is registered in India as per Companies Act or a statutory act. Okay, like LIC and all that. Okay, so that those are all Indian companies. So what is this remaining part of domestic company? So it is a company. Okay, it is not an Indian company, but it pays dividends in India. Okay, basically in short we can say that this is a foreign company only, but it pays dividends in India. So that is called a domestic company. Okay, so yeah, this is the short thing. And now we'll just see all these three in little more detail. See, now this Indian company, first thing, let's start with Indian company. Okay, so it's a company formed and registered under Companies Act, right? Includes, this is statutory corporation. Okay, that is IDBI, LIC, all these things are statutory, RBI, all are statutory corporations. Okay, so these all come under Indian companies. And second one is if it is declared by CBDT to be a company. Okay, if it is declared by CBDT to be a company, then that particular category of company will become an Indian company. Okay, so that's all. So what is there in Indian company? You have got companies registered under Companies Act or any other statutory act. That's it. Okay. Or if CBDT has called it as a company. Okay. No, Kanagraj, domestic company cannot be an Indian company. See, in this diagram, if you see, Indian company is this yellow part, whatever is slight yellow part, this one. This is your Indian company. So anything which is outside this in the diagram is not an Indian company. So domestic company actually is a foreign company. Okay, it's a type of foreign company, but it is regularly paying dividends in India. So which is why it is called as a domestic company. So, but within the definition of domestic company, okay, you will have two things. One will be these kind of foreign companies, okay, these kind of foreign companies, and second will be Indian company. These two will come under the definition of domestic company. Okay. So we'll see the definition of domestic company next. So it will be clearer for you. Okay. This is your domestic company. It means one is an Indian company. So Indian company is a domestic company. This part is only Indian company here. Okay. This is only Indian company. Okay. So I mean, maybe I did not phrase it well. So under a domestic company, under the name of domestic company, Indian company will also come. Okay. But Indian company is different, and the other part of domestic companies, those are foreign companies paying dividend in India. Okay, I hope it's clear now. So domestic company means first is an Indian company, okay, and second is any other company, okay, which has made arrangements for declaration and payment of dividends in India. Okay, any company which is paying dividends in India, so of course it is liable to tax in India. Okay, so these two things come under domestic company. So domestic company is a wider concept than an Indian company. Okay, okay, clear? Right. So next we'll see what is a foreign company. Simple. Foreign company is company incorporated in a foreign country, basically. That is it here for Income Tax Act, which is not a domestic company. So what you call as a foreign company, see, for as per Income Tax Act, here you will not call this blue part as a foreign company, even though it can be registered in foreign country. This can be registered in a foreign country. But for Income Tax Act, you won't call it as a foreign company. You will call it as a domestic company. Okay. And foreign company will be this. It is registered under a foreign company and it is not paying dividends in India. Okay. An Indian company, if when you are talking about only Indian company, only this, there will be certain rules applicable only to Indian company. So that will not be applicable to all domestic companies also. It will be applicable only to this. Rules applicable to domestic company, it will be applicable to the entire block. Entire block. Rules for domestic company will be applicable to both. Okay, but rules specifically for Indian company will be applicable only to Indian company. Okay. Chalo. Next, we are going to see company in which public are substantially interested. It's called also called as a widely held company. There are two types of differentiations. One is called widely held and closely held. Closely held means anything which you are holding close to yourself. So automatically we are talking of a private company. So private company, everyone cannot become a member, correct? So it is a closely held company, right? And widely held company will be companies normally, generally you can say companies, all other companies other than a private company. But it has been specifically defined. If you see here, you'll get one is a government company. The government is for everyone. The government company will always be widely held company, right? It is for the public, basically government. Okay. So the second is Section 8 companies. These are some non-profit companies. Okay. They have some benefits under the act. You will read this in law, company law. Okay. Details about this. You've got a 35 marks section overall for Companies Act. In that you will study Section 8 company also. Okay. So one is government company, Section 8 company, then mutual benefit finance company. Okay. So mutual companies is like we had already discussed yesterday. So it is when certain number of people will come together, whatever money they are putting together, okay, that will be used for their common purpose. And any profit, okay, will not be taken back by these people. Okay, that's the key point. That's called mutual benefit, mutual company. So here we are talking about mutual benefit finance company. When it is only mutual company, it's a mutual company, but specifically dealing in finance. Okay, that will be mutual benefit finance company. That is the third thing. Four is any listed company will be substantially interested always. Okay, and then if shares are held by cooperative societies in a company, it is said to be substantially interested. Okay, and last is always your prescribed by CBDT. Okay, CBDT has the power to prescribe anything. Okay, so these are the all these things come under companies in which public are substantially interested. So generally, for your understanding, other than private, this will be companies other than private companies. Okay, where the public will have an interest. Okay, so government keeps a close eye on these companies, right? So these are companies in which public are substantially interested. So you should know this. Okay, if you do not remember this mutual benefit finance company also, and just go for government company, section 8 company, listed company, prescribed by CBD. At least these four you can write. Okay, so you will at least get some marks out of 4, at least 3 you will get. Okay, so just start learning all questions. Learning in the sense, as I said, don't learn sentence by sentence, learn keyword by keyword. Okay, you have any problem, any doubt in learning something, let me know. I'll tell you how to learn. I can just, I'll help you how to do that. So, but just finish up these chapters. These you will not be able to come back to these chapters when the real bigger chapters like salaries, PGBP, and capital gains, they'll start. These 3 chapters are the key. Okay, so you will not get time to come back to these. So just try and finish it off here itself. Okay. Now firm, next is firm. Firm means partnership. Then definition of partnership, you all know that it's a relationship between persons who have agreed to share profits of business carried on by all or any of them acting for all. Okay. So there will be certain number of partners. All of them can act for the firm, or only some can act. That's also possible. Okay. That's called a partnership firm. Okay. So here one important point about partnership firm is it is a separate entity in the eyes of the Income Tax Act. You all know that only company is different. It is a separate legal entity, correct? Company. It has a different entity from its members. Okay. So company is not the same as members, but it is not the same for firm in company law. But in Income Tax Act, firm is treated as separate entity as far compared to its or in relation to its members. Okay. So just remember this. And LLP is a new act basically. Okay, your limited liability partnership act. This is also a firm, only difference will be their liabilities will be limited. So what happens is, let's say earlier on, if there are say 2 partners, okay, 2 partners, they have invested 5 crores in the business, right? And business, and then they have got say their own house worth 2 crores. 2 crores is their house. So if the firm went on a loss, huge loss, okay, then what used to happen is, okay, these 5 crores would go definitely, and then apart from that, their property will also get attached. This will also go. Now under LLP, okay, if they have say started with a capital of this, if they have gone on loss, at the most they will have to pay this whole thing will go off if the entire thing has gone into a loss, but nobody will touch their personal properties. At least whatever is the capital invested, only that will go. That is the good thing about LLP. Okay, that's the new thing. AOP and BOI, Association of Persons and Body of Individuals. Okay, so AOP is any group of persons. That is, you can have all we have got 7 persons. Any of the 7 can come together, form an AOP. You can have one individual, one HUF, one company. They can form an AOP. Okay. So, and what is body of individuals? It is also like AOP, but you will have only individuals. You cannot have HUF firm. Okay. Different individuals can form a body of individuals. Okay. And for AOP, there is one thing that it will be called as AOP only when it is an income producing activity. Okay, only then it will be called as AOP. Okay, and for BOI, you need not have this income producing activity or anything like that. Okay, BOI will be a BOI. Okay, whether it is for income producing activity or it is for some common purpose, they are forming a say BOI just to protect their society or to raise awareness, even that will be a BOI, even if there is no profit motive. Okay, so that one example of BOI is co-heirs and co-donees. Okay, that is when two people have given a joint donation. Okay, there will be a BOI for that. And co-heirs. So co-heirs, what happens is, say, if a person has passed away, okay, a person has passed away, is passed away. Now he has got 2 children, A and B. Okay, now his property as of now has not been transferred to these two. Okay, it will take say some time, 2 months, 3 months, whatever. Till that time, these two will be called as body of individuals. So whatever profit will come, it will automatically go half year, like that. Okay, till everything is legally as per dad's will or whatever, legally it goes to them. Till that point of time, there will be a BOI. Once it is property separated out, there will no longer be a BOI. ठीक है, समझ गया ना? तो एओपी और बीओआई में क्या फर्क मैंने मेन बताया. एओपी में कोई भी पर्सन हो सकते हैं, आपके इंडिविजुअल हो सकते, कंपनी, सब अलग अलग पर्सन मिला के बना सकते. बीओआई में सारे इंडिविजुअल्स ही चाहिए. ओके, बोथ आर ग्रुप्स. ओके, बोथ आर ग्रुप्स. राइट, देन नेक्स्ट इज लोकल अथॉरिटी. ठीक है, लोकल अथॉरिटी इज व्हाट? इट इज समथिंग व्हिच collects tax. So basically it has a local or municipal fund under its disposal. Normally your municipalities, panchayats, all these are local authorities. Okay, municipality levies some tax on you, right? Your water tax, sewerage tax, all that, whatever municipality tax every year we have to pay, isn't it? So because they have the power to levy tax and they maintain a coffer, that is एक खजाना अपना मेंटेन कर सकते हैं, एक फंड मेंटेन करते हैं वो अपना, their own fund. So that is local authority. By what name it is called is not important. Whether it is maintaining its own fund, it is capable, whether it is capable of maintaining its own fund. Normally there will be one property that they will be taxing someone, maybe just 1,000 people, maybe more than that, but they will be taxing a certain number of people and maintaining a coffer. Okay, so it is a legal authority. So basically आपका central government, state government, and then you have local authority. Okay, so this is also a small form of government only. Okay, at the local level. So this is local authority, that's all. Okay, it's main what you have to see here: legally entitled or entrusted by the government with control and management of municipal or local fund. Fund है ऐसा नहीं कि जैसे 2-3 people have just paid and made a fund. No, this is different. It has the power to tax people, okay, and collect a fund, maintain the fund, and to use the fund for the public. Any private person will not have that authority, right? Even for that, even take bigger people, even take Ambani. Can Ambani tax you directly? No, correct? So that is the difference. So local authority can maintain a municipal or local fund. Last is your AJP or artificial juridical person. This is what your this is first thing is it should not be a natural person, because we know all natural persons are individuals, correct? And then it has separate entity in the eyes of the law. Okay, like a company, separate legal entity in the eyes of the law. And third property of AJP is it cannot be directly sued in the court of law. but you should sue it through persons managing them. Okay, why? There is this property that you will only sue through persons. For example, you have got, if there is any fraud in Tirupati, fraud has happened, say, just taking a rough example. Okay, say, just assume there's a fraud in Tirupati trust or something like that. Okay, will you sue Tirupati God? If you sue Tirupati God, then there'll be a huge riot then. Okay, so that's why never these deities can never be sued. Okay, so that's why people who manage it, they will be sued. Okay, although the trusts are run in the name of the deities, you cannot sue them. That will become a big issue. Okay, chalo, this is done. And then, so here examples are deities, idols, university, even university and bar council, they are also artificial juridical person. Remember the examples of AJP because there aren't too many. Okay, ठीक है, याद रखिए, deities, idols, university, bar council, छोटे कम ही एग्जांपल है, याद रख लेना अच्छा है. These come under artificial juridical persons. If a short note comes on this, you have to write it's not a natural person, separate entity, and cannot be directly sued in the court of law. These 3 points, give the examples, that's enough. Okay, right? Okay, so last point is just AJP has certain tax exemptions. Okay, because of the way they are structured, as you can see, it is mostly your DTs, idols, and all. There are some tax exemptions. Okay, so that's it. And after this, we have got, these are certain things you have to tell me which is which, whether it is which kind of person, individual, HUF, AOP, BOI, AJP. ठीक है, तो क्या होगा ये पहला वाला?
Local authority.
हाँ,
Local authority. Okay. Municipal corporation. Howrah Municipal Corporation.
correct. Okay, because so it's a, so don't get confused by the word corporation, saying that it's a company. It's a municipal corporation. Okay, local authority. Next is Corporation Bank Limited. See, if limited or private limited comes, don't think. It will be a company.
Company. Domestic company.
Okay. So Mr. Amitabh Bachchan.
Person. Sir.
Individual.
Individual. All of them are persons. Okay. All 7 are persons. So individual. And ABCL.
Company.
Very good. Then joint family of Sri Ram, Srimati Ram.
HUF.
Hindu.
Okay, good. Calcutta University.
Artificial.
Artificial.
Very good. Okay.
Artificial.
In AJP, as we have seen, there are very few examples. Always remember that. Okay. Only one of these 4 will come in AJP. X and Y, who are legal heirs of Z.
BOI.
Body of individuals.
Very good.
Body of individuals.
Sole proprietorship business.
Individual.
Business number.
Firm.
The individual. Sole partnership means individual. No?
Very good. Okay. So it will be an individual, because here, see, whether it is business or whatever you are doing, if you are one individual person, you will be taxed as an individual. Only if you are a partnership firm, it will be a firm. Only if you are a company, it will be a company. Okay. If you are one person doing your own business, it will be individual always. The last one. Partnership business firm.
Firm.
This will be firm. Okay. This is what about this. Okay. Next is about income. I'll just give you, so we might not be able to finish this chapter today. Okay. So we will have to continue a little bit tomorrow as well. Right. So, right. So I'll give you a little bit of a break. Okay. Just take 3 minutes. I will 3 minutes. We'll join back at 8. Okay. And 8:30 we'll complete. 3 minutes break. Okay. Okay, so I think we can continue. Now, next is income. Okay, we are talking about what is income and various characteristics of income. So first is the income can be received in cash or kind. Okay, both are fine. For example, if I am paying you, I have to pay you 20,000. In its place, I have given you my bike. Okay, so that bike will be your income. Its market value will be seen, and that will be treated as income. ठीक है, income cash में भी हो सकता है, kind में भी हो सकता है. Okay, then next is an important point. You've got 5 heads of income, right? That is salaries, house properties, PGBP, profits and gains of business or profession, capital gains, and income from other sources. Now in this, just remember always that your PGBP and other sources, okay, which is number 3 and 5. But always first one is salaries, then second is house property, okay, third one is PGBP, fourth is capital gains, and fifth is income from other sources. So third and fifth, PGBP and other sources, always your tax is computed based on method of accounting regularly followed by the SSC. Okay, so there can be 2 methods. One is cash basis, one is mercantile basis. Professionals and all normally they follow cash basis. Okay, so otherwise all companies and all mostly they follow mercantile basis. So your income tax authority has to compute income only based on whatever method the SSC is using, only for PGBP and other sources. Salary, house property, and capital gains, it is irrelevant. See, for salaries, whatever salary you are getting, right? It will get credited to your account. There's no question of accrual or all these things, correct? So which is why for salary, house property, and capital gains, you do not have to see the method of accounting. Okay. Okay. So this is one important thing. याद रखना बस ये 1 2 3 4 5 ऐसे याद रखना है इसको हमेशा आप. Okay. So basically your 1 2 3 4 5 your heads of income in this order. Okay. This is salaries. Okay. This is house property, second one, and this is PGBP, capital gains, and IOS is income from other sources. Okay. So of these, I am saying this number 3, which is PGBP, and number 5 IOS. For these two, whatever kind of books the SSC is maintaining. If he is maintaining on cash basis, you cannot force him to convert to accrual basis and then find profit. Use that basis only. If he is following accrual, then use that only. And it should be regularly followed. He cannot change it every year. Okay. Right, and then notional income is not income. Okay, that is your own business. You are transferring from one department to another. That will not be considered as an income. Okay, you cannot make profit out of yourself. And then you have got capital receipt and revenue receipt. Okay, capital receipt is not chargeable to tax. Okay, capital receipts are not chargeable to tax. What is a capital receipt? See, I'll give you an example. That see, you have invested 5 lakhs. 5 lakhs in a business. You have bought things, sold whatever you have done, and in the end, okay, in the end, you have got back 5 lakhs only. You have not earned anything. Say after a year, 2 years, you have got back 5 lakhs. So now you have got this 5 lakhs. Should it be taxed?
No.
Because it's your own money, right? It's your own money, so it should not be taxed. Basically, it cannot be taxed. So this is called a capital receipt. Okay, which doesn't have an income element. Whatever you have invested, that you have got back. ठीक है, जो आपने जो इन्वेस्ट किए हो वही आपको वापस मिल गया, तो उसका टैक्स नहीं होता. करेक्ट. So that is called capital receipt. Revenue receipt is का मतलब है which you are getting as a profit or interest. Okay, so revenue receipt is always taxable unless exempted by the act. And capital receipt is not liable to tax unless some provision is asking you to tax it specifically. So reverse treatment for these two. Okay, income includes loss also. We know that. Okay, just you can show it as a bracket or with a negative sign. Right? And reimbursement is not an income. Again, same thing, right? Same logic as we showed in capital receipt. Reimbursement. Okay, so you have spent something on behalf of your employer, and that if he has given you back, that's your money only, right? You're not getting any income. So which is why reimbursement is not an income. ठीक है, reimbursement यानी जो आपको वापस मिल रहा है वो इनकम नहीं होता. ओके, आप ही के पैसे आपने पहले खर्च कर दिए.
Sir, I have one doubt.
Yeah, sure.
Sir, I purchased land for previous year or last 2-3 years back. Now I sell by get the cash by the sale of that land.
Yeah, so whatever profit you are earning on it, that will be taxed in capital gains.
Oh.
Okay, but
Okay.
say if you have sold it at the same price, then it will not be taxed, correct?
Okay.
So, and so now next is if there is dispute regarding title of income. Say there are 3 brothers who are fighting for the property. Okay, there is dispute, but an income has come to them. Okay, income has accrued to them. So income tax authorities will not wait for the tax. You have to pay it. The person who has received the income, okay, or who is enjoying the benefit, he will pay the tax. Okay. So in case of dispute, the person who is getting the benefit, he is taxed. So income, the taxation doesn't wait just before you have a dispute. Okay. No difference between legal or illegal income. Whether it is liquor income or whatever income, if you're getting income, you will be taxed. Okay. Income tax act doesn't has nothing to do with legal or illegal income. If it is legal, your general law will act on you. But whatever income you have earned, income tax will tax you on it. Okay. No double taxation. Same income will never be taxed twice. Okay. Same income cannot be taxed twice. Okay. This is one more thing. Once only we will be taxed on an income. No double taxation. Okay. Next, we are going to talk about income from mutual activity. Okay. Mutual activity income is not taxable. Okay. So what is a mutual activity? Again, if I tell you here, you can see, say there are 4 people. Okay. They have put some common money together. They are making a club or whatever. They're putting some common money here. Okay. And they have used it for common purpose. Okay. They have formed a club and they're using the club. Right. And what will happen? They are using it for their common purpose. Any income they are getting, they are putting it back in the club. They are not taking out any money. So that is one main condition. Profit they should not take out. They should put it in that common thing only. Then it is not taxable. It is treated as a mutual activity because they are not doing any profitable activity. Okay. So, and in the end, if anything is remaining, okay, in the end, then it will get distributed to all of them. Okay. While distributing, if there is any income, then it will be taxed. Okay. But as of now, you are when you are running a mutual activity, during that time, anything you are getting any additional income and you are putting it back in the same thing. Okay. Then it is not taxed. That's called as mutual activity. So as per your taxation system, mutual activities are not taxed. Okay. But there are 3 exceptions that only you will have to understand. One is income derived from a trade, professional, or similar association. Okay. From rendering specific services to its members. Here, important word is specific services. Okay. They are saying specific services. Okay. So this will be taxable. So what is specific services? I'll tell you here. Say, for example, this is an association of CAs. Okay. CAs have come together and they have made a club for relaxing. Okay. Now what has happened is, say, one of the members, now he needs some CA service. A member needs a CA service now. Okay. Now because they are all together in the same club. So for example, if there is a doctor, say in your yoga, if you are going for yoga somewhere, there is a doctor who comes. You have any problem there itself, we ask them, right? And today my hand is paining, my head is aching, whatever, right? There itself we ask them. Normally it happens, right? When you are in a group with professionals. So if it is a CA group, people of CA are there, okay, and they have formed a club for relaxation. But there is some person who is now taking a service which otherwise he would have been taxed. Is taking a service from the CA and whatever money is there, is paying it to the association only. The club only is paying. But otherwise, had he gone to the CA's office, he would have been taxed for it. Okay, so that is called specific service. So for specific service, you will be taxed. Specific service is outside the purpose of the or outside the purview of the mutual activity. Okay. Okay. So in that case, you will be taxed. Even if the CA is not taking it home, it will still be taxed. Specific services. Okay. Right. Next is profits and gains of insurance business. So first you saw specific services is an exception. Second exception is insurance business. Why? Why insurance business of mutual insurance company? In insurance, what happens? See, what is the concept of insurance? In the end, you have got many people, they'll put money for insurance. Okay. And say you have got 100 people for an insurance. Concept of insurance is this, right? There are 100 members of insurance. They're all putting money, or what you are collecting is, say, 2 lakhs. 2 lakhs you have collected. Then some people have incurred that liability for which they are taking this insurance. For that, in the end, say you are overall you are paying 1 lakhs, and then this 1 lakh becomes your income. Correct? This is the concept of insurance. So insurance business is set up in a way that you are bound to have top profit, mutual or not mutual. Okay. So mutual insurance companies business, that doesn't come under this exception. Okay. Okay. And last is business of banking carried on by cooperative society with members. Just remember these 3 exceptions. Okay. That income from mutual activity is not taxable, has got 3 exceptions. One is specific services. Second is insurance business of mutual insurance company. Third is business of banking carried on by cooperative societies. 3 exceptions have been maintained. Okay. Because they are prone to profits. Okay. This is one thing. Then pin money is, see, this is a very simple thing. Pin money. So pin money is basically what normally nowadays we have, of course, many women are working and they are financially independent, but most of them even today they depend on their husband's income. Okay. So when they get money for the monthly expenses, they save something. Correct? So whatever they save is called as pin money, nothing. That's all. Okay. So that pin money is not taxed. It is not non-taxable. Okay. But if she is investing the pin money and getting interest or something, that will be taxed. Okay. Otherwise, directly that pin money is not taxable. Got it? Okay. Next is treatment of award. Okay. So awards, just remember, if it is business award, any award received in business, then it is treated as a business income. Okay. So for other things other than award received from a non-professional person for gift or personal testimonial, okay, is subject to other provisions of the act. So in salaries, you have got certain provisions. Wherever you are getting the award, you will have to just see the provisions. Normally speaking, I can tell you generally, when you are getting a general testimonial or gift and award, that is not taxable. Okay. But we'll look at the subject of award in the chapter salaries in detail. But normally for salaried person, awards will not be taxable. Okay. Understood? Okay. But business award, any award for business is treated as business income. Okay. Next is embezzlement. Embezzlement means what? You are basically fraud or that kind of activity, and you are in earning money. So earlier itself we have seen, right? Income tax doesn't have any problem, any relation with legal or illegal money. Okay. If you're earning, you will be taxed. Okay. So this is income. There's no problem with that. And here, if there is an anticipated income, that will not be taxed. Okay. That income should be due on your hand. Only then it will be taxed. If you are expecting that income, no tax. Okay. Next point is about subsidy. This is also an interesting point. Subsidy is also treated as income. Okay. Subsidy is income. What is subsidy? We'll see. So here, why is it treated as income? Why? Okay. See what happens. Say this is your total cost. Say this is your total cost. Okay. But the government or some authority has given you this subsidy, this much, that you don't have to pay this. So this much cost will be reduced for you. Your net cost will be what is shown in green. Cost is reduced. Now sales minus cost is profit. If cost is reduced, your profit will be increased. Correct? Okay. So that is why any subsidy is treated as profit. Subsidy given is treated as profit. Okay. Right. So subsidy is treated as income. Right. That is the reason for it. And then subsidy given by CG or SG for corpus of trust. For corpus is the main fund of trust. If they are giving a subsidy, then it is not income, because the government is giving a subsidy for a trust. Of course, it will be for a good purpose, a noble purpose. Only then they are getting government subsidy. So that is exempted for trusts. Okay. And subsidy taken into account for determination of actual cost of asset is not included. This thing I'm parking now because we are going to see this in detail. Okay, this entire thing about actual cost will be studying in detail in your further chapters. You've got a complete detailed set for this. So this sentence, what you are seeing here, no, we'll be spending about 20-30 minutes to discuss this. Okay, which is why I'm parking this as of now. Okay, just remember that subsidy on actual cost of asset is not income. Just remember that much. Okay, we'll take it up in future. So then next point is heads of income and source of income. So you've got 5 heads of income. Everyone is clear with this? Okay. And under one head of income, there can be several sources. You are taxable under PGBB, but you have got 20 businesses. Okay. So you've got a cycle stand business, you've got a newspaper business, you've got this business, that business. All are heads of income. And what is the source? PGBP, profits and gains of business or profession. Okay. And then, so what is now, last thing is we'll talk about gross total income. All income under 5 heads of income are added, okay, to arrive at the gross total income. So I'll show you here. Okay, fine. Right. So now I'm explaining this point here, gross total income, whatever is written here. Okay. So if you see how income is computed, that we're going to see here. First of all, you will have to add all your heads of income. Okay. This is salaries, house property, PGBP, capital gains, other sources. All you will add here. Okay. Fine. So when you will add everything, you will get a total. Okay. From that total, what you will do is you will do set off and carry forward of losses. That means you can have a loss in one of these heads, you will have profit in another head, so you can set it off. That is a subsequent chapter we'll see later on. Right now, it doesn't have a relevance for you currently. Okay. So much later chapter. So you have to do some set off and carry forward of losses, and you will get net of this. Even before this, here you will have to adjust what? If you have to do some clubbing of income. What is clubbing of income? If you have a minor child who is earning income, things like that, that income is clubbed in your income here, clubbed in the heads here. And then you do set off and carry forward of losses. Okay. After doing all this, what you get is your gross total income. This is called as gross total income. From this, you have got many deductions. So many of you would be knowing section 80C and all that, LIC deduction. All those deductions come under deductions from gross total income, which is 80C to 80U. Deductions under 80C to 80U. After giving this deduction, you will get your net taxable income. Okay, it's called as total income or net income, okay, or taxable income. Okay, this is how your computation of income is done. Fine. Next is see rounding off of income and rounding off of tax. There is nothing to read in this. Okay, I'll show you how you round off. First is this is rounding off of income. Okay, in income, see the sections 288A and 288B. If you can remember it, well and good. Okay. Otherwise, do not really focus too much on remembering sections. Okay. Now, in rounding off income, what happens if your income ends with 5 years? If it is ending with 5 at the end, you have to convert it to the next 10. So, see, 65 becomes 70 here. 65 has become 70 because it ended with 5. But if it is less than 5, ending with less than 5 year, it's ending with 4.85. Okay, it's ending with 4.85. It is less than 5. So then you will have to write it back behind. So it will become 64.85 will become 60. Only remember that if ends with 5 or more than 5, convert it to the next 10, less than 5 to the previous 10. That's it. Same thing. This is the rounding of total income. After total income, you will apply tax rates, you will get tax. Then the final tax figure after everything, you will do interest, penalty, everything. you do, okay, and your cess, there's something called a cess, we'll talk about it, okay. There's a 4% cess which has to be paid. So after doing everything, the final figure of tax, if you are getting a decimal in this, then follow the same procedure again. Follow the same procedure for tax also. So 2 times you round off, one at income stage, second at tax stage. 2 बार आप राउंड ऑफ करोगे, एक बार इनकम को, दूसरी बार टैक्स को, ठीक है। ये सब अभी शिवम सर के साथ आप प्रॉब्लम्स जब करोगे, वो इसके सब प्रॉब्लम्स आपको कराएंगे, ठीक है। सो बेसिकली ऑन थर्सडे Shivam sir will take you through some problems, okay. You will have all these things, you will have to round off tax, income, and those kind of many relevant things will be there, okay, on Thursday. So all practically, once you see that, it will be even more clear. This is rounding off of income and rounding off of tax. Okay. Next, we are talking about capital versus revenue. Okay. So capital receipt is exempted. We have seen revenue received is not exempted unless specifically provided. We have seen these two things earlier, right? Okay. So and capital receipts are dealt under capital gains, revenue receipts under the other 4 heads. Okay. That is the only point. There is nothing really to explain here. Yeah, this is important point. Receipts in lump sum or installments is same treatment. You're getting a salary of 10,000 per month, or you are getting 3 years salary together. You have a contract getting 3 years salary together. It doesn't make it capital. So don't get confused with the quantum of the income. Capital and revenue has nothing to do with the quarter. It is quantum. It is the nature which is important. Okay. So whether in lump sum or installment, income will remain income only. Okay, in both cases, revenue receipt. Got it? ठीक है, तो यहाँ पे ये देखना आपको जी इनकम है, आपको एक साथ 6 months की सैलरी अगर जोड़ के मिल रहे हैं तो वो कैपिटल नहीं हो जाता, वो इनकम ही रहेगा, ठीक है। दैट इज 1 point. And then magnitude of receipt, magnitude big or small, it doesn't decide whether it is capital or revenue, okay. Never get confused with magnitude. Now voluntarily or under legal obligation, no difference, okay. Sometimes you will get a higher bonus which was not there in your condition, but you have got. It doesn't mean it will not be taxed, okay. Voluntarily or legal obligation, however you have received it, then pay tax, okay, right. Yeah, next point, what it says is purpose of keeping an article. Okay, it says that see, just think of a sculpture, okay, or a picture, painting or something like that. If you have bought a sculpture for decoration, that becomes your capital asset. It's called a capital asset. If you sell it in future, okay, capital gains tax can arise depending on the capital gains provisions, okay. So but it is a capital asset. Now if there is a person, okay, the person who is selling these sculptures, okay, he will have several of these sculptures inside here. This all this is stock in trade, is selling all this, correct. So because he's selling this as a stock, this, if he sells it, it will be his business income. The same thing, this sculpture, this person is keeping at his home, then it becomes a capital asset. Got it? Got the point, right? So it is the purpose of keeping an article. If you are selling something, okay, even houses for that matter, if you're doing selling and buying of houses is your business, houses will be your stock in trade. Okay. And expenses, same treatment as income, means the way you have treated income, with the same logic you will treat expenses. Okay. That is to bifurcate between capital expenses and revenue expense, same logic as income. Okay, so and right, some other points we'll see. This is if you are acquiring an asset of enduring nature, okay, that is normally capital expense. So these things we can move quickly through this, because as of now we go into the heads of income, we will be treating this in more detail. Okay, so if it is an asset of enduring nature which you are buying, okay, normally which is used for more than one accounting period, it's called a capital asset. Okay, and see, if you are using assets belonging to third parties, and you have an asset, you have a house, it is capital asset for you. You have given it to me on rent. Rent I am paying is revenue expense, correct? That's the point they are making. Okay, so profit earning process, you are spending for profit earning process. Okay, that is you're manufacturing something or like that. It is a revenue expenditure. Object of the transaction is very important. Like, what is your object? Like we saw in the sculpture example, the one person's object was to keep it as a capital asset. Second person was selling it as a stock in trade. So object of transaction is also important. Okay, next is fixed capital versus circulating capital. Fixed capital is once you have invested in a capital asset like furniture and all, it will remain like that. But stock in trade, you will buy, you will sell stock in trade, it will get converted to capital, and again you will buy some stock in trade, it will again get converted. So such things are called as circulating capital. Okay, and for if you are removing any restriction, okay, that is a revenue expenditure. For example, having uh, you are having a showroom. Okay, so you are having a showroom here, and let us say that there is one small road here, it goes, you have a showroom here. Okay, now some person has come and he's blocking your entry, he has blocked your entry. Okay, so your daily business has been affected. So if you have put a case or litigation, and for that you have incurred expense, it will be revenue because it is for your regular business earning process. Okay, so if you are putting any case or suit for defending yourself in doing your regular business activity, that will be revenue. Okay, payment to rival dealer to ward off competition. Okay, so this is capital expenditure. So this ward off competition, for example, means that say I am doing Reynolds pen business. Okay, Reynolds pen business, and every yearly I am getting 5 crores is my income. Now Rotomac has entered this business. Rotomac is entering my business. Okay, so I saw that if Rotomac comes, then my 5 crores will get reduced to 2 crores. Okay, so I made a deal with Rotomac. I told him, uh, why are you spending so much putting your business and energy? I straight away give you 1 crore. Make an agreement with me that you will not enter this area of business for the next 5 years. So in the end, what happened? My profit now is 4 crores, better than what it would have been had Rotomac started business. So it's good for me, and for him also. So without doing anything, he's getting 1 crore. Now, same energy he can spend elsewhere and earn some profit out of it. So he'll say, okay, so now this money which you are giving, okay, this is termed as capital expenditure. It is not revenue, okay, because this is for your entire future business. You are paying this for an entire future business. Okay, so which is why it is deemed as capital payment. Okay, then expenditure for ensuring regular supply of raw material, you all know directly it is revenue. Okay, even if it is a contract for several years, but raw material supply is a revenue. Acquisition of goodwill, capital. You just have to know what is what. Okay, that's important here. Most of these are court cases. Okay, this come out of court cases. Expenditure incurring for creating, curing, or completing title is capital expenditure. Okay, now here if you can see this and the last one. See, if you're creating a title, okay, or curing a title, that is, there is some mortgage already, you didn't know. Now you came to know after buying there is a mortgage. Okay, so then you will have to pay the amount and clear it off. Otherwise, you will not get clear title. That is called curing. or completing the title is registering. Till you register, your asset doesn't completely become yours, correct? So all these are capital expenditure. But protecting is the example which I gave you just now, that is revenue. Okay. So that is it. And then I'll just give you one, there's a small example. We'll complete this and then we'll continue tomorrow. Okay. So here, this in this case, what happened, I'll not read the whole thing. I'll just tell you what it is. Okay. So in this, there was a cement manufacturing company. Okay. So it wanted to purchase an additional cement plant. Okay, it already had cement plants and it wanted an additional cement plant. And the condition with the supplier was you have to give it in proper time. If you did not supply in proper time, then 5% of the price was the compensation. Okay, 5% of the price was the compensation. That was the condition. So now then actually the supplier could not supply it in time and he had to pay compensation of 8.5 lakhs. So this 5% amounted to 8.5 lakhs. Okay. So so you had to pay 8.5 lakhs. So short question is this 8.5 capital or revenue? Supreme Court decided that it was a capital receipt. Okay. Why it was, see, there are two things which can be seen. Now here it is for purchase of a income producing thing, plant you are saying, right? That is, it is you are getting this for a capital investment, not for revenue investment. Okay, 8.5 lakhs you are getting for capital investment. Okay, that's how Supreme Court saw that and awarded capital receipt. You can also see it in another way, that why it said 5% of the price, because it thought that if we did not give it in time, I will lose out on profit of 5-6 months. Okay, he might have thought I would have lost out. For that profit, he's asking this compensation. In that case, it would be a revenue expenditure. So in this case, the court decided that it was a capital receipt. Okay, so it was not taxed. That is this particular example. Right. So next we'll continue with tax planning, tax avoidance and tax evasion. So we still need about half an hour more to complete this chapter. So tomorrow we'll complete this chapter and we'll start residential status also. Okay, along with it. So that's it now. Okay, any question if you have, we can discuss that.
Sir,
Yes, Madhu.
I have a doubt. You said it is not necessary to write the sections for the direct tax thing, right now, sir?
Not necessary to write.
Sections.
Yeah.
Even for PG, it applicable for PGBP as well as capital gains, sir.
What you can do is see, just go for a certain number of sections. Say, for example, I'm saying for PGBP, just think that you will remember any, say, 8 to 10 sections, 8 sections, let us say. Okay, just limit yourself to some important sections. These sections would be such that you will automatically learn it when you do your practice. This much you will know automatically. Okay, so you will not have to separately sit and learn. So there will be certain number of sections which you will be knowing, but you don't have to sit down and separately learn all sections. That is not required. Okay, so as and how we do, I will tell you which are the important sections. Just remember that much.
Yeah, okay, sir. So another one doubt, sir.
Yeah, sure.
Yeah, sir. For this exam, we are following the old slab rate or new slab rate, sir.
We are following, see, the old one is still there. Okay, old one is also there, new one is also there. Okay, so you will have to, the SSC can opt for anyone which he wants. Okay,
sir.
the new one is called as 115 BAC is the new one. Okay, so and the old one is also there. So both are there. Whichever is more beneficial, you have to compute out of this and out of this, and whichever is more beneficial, you can opt for it.
Okay, so we have to work out for both regimes, right, for the
No, no,
exam?
no, no, no. If the new one, if it is specifically asked, only then you have to do. Otherwise, all problems understood, it will be that you will do as per the normal procedure.
Yeah,
Normal
okay, sir.
procedure, current one, old one.
Yeah.
Okay. If they are specifically, they will ask 115 BAC, that section, only then you have to do, otherwise not.
Okay, sir. Okay. Thank you.
No problem. Okay. So that's it now. So so we'll meet tomorrow, same time. Okay. So thank you, all of you. If you've got no further questions, I'll stop it.
Sorry, Himanshu here.
Yes, Himanshu.
Sir, what about OMS in class? When that will be starting?
It will start at 9 o'clock, Himanshu.
Okay, sir.
9 o'clock. Going forward, we have got two timings, 7 to 8:30 and 9 to 10:30.
Okay, sir.
Okay, no problem. Thank you.